Turning to business news now with Nicholas Poynton, who's in our Wellington studio. Good evening, Nicholas. The
Good evening.
BNZ Bank is on the top of your agenda this evening. So, latest retail bank to report a full year's result. How has COVID hit them?
Well, look, like all the other major banks have been putting out their results in the past 2 weeks, its profits have been ravaged by COVID-19. So its profit for the year, it fell by about $250 million to $1 billion. And like everyone else, it's been feeling the squeeze in this low interest rate environment that's been cutting into its margins. It's also suffered higher costs. It's put about $300 million aside to cover bad and doubtful debts. And to put that in perspective, that's nearly 3 times more than they put aside last year. The bank does believe, though, that the level of bad debts has peaked. It expects the final costs to come in just below this amount, but it did warn that there are headwinds on the horizon, given that we're going to have a summer without international tourists. The bank's CEO says it's just had a record month of mortgage lending and was keeping a, quote, watchful eye on the sector, but it wouldn't go as far to say that the housing market has become overheated, or if there was any need for some measures there from the Reserve Bank to maybe curb some of the demand. What does differ this bank from the rest is the view it's taken that the recovery would be driven by the fortunes of small businesses. And this is one of the reasons why it's loaned more through the government's backed business loan scheme than any other of the retail banks. And on the hot topic of a negative official cash rate, the CEO says it may be made unnecessary given the likelihood of this new funding for lending program that the Reserve Bank has been talking up. That's a situation where retail banks would effectively or essentially be given money to then go out and lend. And we'll hear more about that funding for lending program next week when the Reserve Bank makes its final monetary policy statement for the year.
Nicholas, the other thing I see, Villa Maria selling its vineyard in South Auckland. Why is that?
Yeah, this is a story that's just come through late this afternoon. So the wine giant is selling 31 hectares of surplus land that surrounds its headquarters there in Mangere. It's exploring the prospect of raising more money to sort of fund its global growth ambitions. It says this money would be used to really raise the profile and the demand for a range of its brands, in particular in the North American and Asian markets. And this land, well, it probably will not be coming cheap. It was acquired by the winery back in 2000, and it has now increased in value to the point where it just makes more sense for the winery to sell it than to continue using it as a vineyard. And you've got to bear in mind this is a big company, a big winery. They do have a lot of vineyards. So the company says it would continue to operate in Auckland. It would still keep about 10 hectares. It would shrink the size of the land it has there to about 10 hectares, and it would keep its winery, its bottling and warehouse operations. And you can imagine there's probably a property developer out there who is licking their lips at the prospect of getting their hands on this land and hopefully just maybe turning it into some affordable housing there in South Auckland.
And Nicholas, what about goings on the market today? Can we take a quick trot around those numbers?
Yeah, sure. So our own share market, it's up by about 50 points to 12,250. Got a bit mucked up there. Our dollar is sitting at 67 US cents, 93.4 Australian and 51.7 British pence.
Thanks, Nicholas. Nicholas Poynton with Business News joining us from our Wellington studio today.